We have yet another IPO that we're going to be discussing today, Netskope. Welcome back to Chip Stock Investor. It's Nick and Casey.
If you read our blog article from a couple of weeks ago about the so-called browser wars, you got a little sneak peek of Netskope. Netskope was on our list of companies that have been developing enterprise internet browsers for the AI era. Make sure you check that out over on chipstockinvestor.com. And you can join Semi Insider while you're over there as well. This is a topic we've been discussing, especially for the last few months. Now, Casey, other than the Browser Wars blog article, everyone might be a little familiar with the cybersecurity company if you also watched the video about Rubrik. Rubrik was an IPO a year and a half ago, and Rubrik and Netskope actually share a common venture capital investor.
Here's some of the top shareholders of Netskope, and in purple we have highlighted for you Lightspeed Ventures. Here's a look at the top shareholders of Rubrik, and as you can see, once again highlighted in purple, top shareholder for Rubrik, Lightspeed Ventures.
Both of these charts brought to you by the sponsor of today's video, Fiscal.ai. When we were doing a deep dive into Netskope, and before that, Rubrik, Fiscal.ai's platform was a top source of the information that we gathered up when going through our investing framework on both of these cybersecurity companies. Besides a look at the top shareholders of the two companies, you can also, of course, make great financial visualizations like this one. What you're seeing here is Netskope's quarterly revenue, GAAP net losses, and negative free cash flow, which we'll be talking about here shortly. But Fiscal.ai has got you covered. Whatever it is you need to analyze about a business, they've got it.
And great thing is that you can get 15% off with our unique code fiscal.ai/CSI. We'll leave that in the video description and here on the screen. 15% off fiscal.ai/CSI.
So Casey, let's talk about Netskope and let's run it through our investing framework. And we'll start from the top. Casey, maybe tell the folks at home why they should care about cybersecurity stocks in the first place.
It is a huge industry. $215 billion annual global spend in 2025, as well as an expected annual growth rate of around 12% in the next 5 to 7 years. It's a very big market, and Netskope plays in one of the biggest areas, cloud security, an over $60 billion market. And we have those arrows pointing to the other three areas of cybersecurity: application, identity access, and endpoint. Because all of these other areas are related. They don't provide these specific products necessarily, but all of them are very interrelated and part of a platform.
And this is something that makes Netskope unique. If you've been watching our cybersecurity videos for a while, you know we've been talking about Palo Alto Networks, Fortinet, and then not pictured here, CrowdStrike, because they don't do specifically network security, more traditional network security rooted in hardware like these companies do. But the theme among these big players has been to build out their platform to consolidate more market share to themselves. And this is what makes Netskope unique. It's a small company, recent IPO, and they've already built themselves into a small platform that specifically competes in SASE, Secure Access Service Edge.
SASE isn't a term that we coined, but rather Gartner made up in 2019. It combines network security and other security service products into one unified cloud subscription offering. SASE is great for hybrid businesses where there's workers on premises and those that work in the cloud remotely.
It's a nice little chart here on the left that Netskope provided in their S1 filing before the IPO, showing all of the different products that they have added to that SASE platform, which you can think of as a fleet of data center locations all over the world, located close to their customers, and they deliver all of those various security products through those points of presence from those data centers where they have installed their networking equipment. And to bridge us back to the Browser Wars blog update, one of those products that Netskope provides via their points of presence is that Chromium-based web browser, kind of like Palo Alto's new product as well, also based on Chromium, Netskope Enterprise Browser, a way for companies to control what their employees are doing, especially in the AI era. There's massive potential for data to be leaked because of everybody's use of AI chatbots. So this is one solution that can help companies control that data and make sure it's not leaking out into the open internet or being tapped into by the bad guys inadvertently.
As we showed you, Netskope has a number of SASE competitors, and Fortinet specifically is a big one. This is one key risk for Netskope. Netskope is involved in some legal proceedings against Fortinet.
Yeah, a lot of corporate intrigue here. Fortinet actually sued Netskope a few years ago. Netskope has countersued regarding some of the patents that Netskope has. Fortinet claims they have in their respective security platform. And another more minor one, this is Zvelo, which is a penny stock, also sued Netskope on similar grounds, claiming that there was some patent infringement here. All of this is to say, when you're a small company like Netskope, you've experienced some early success. There's always this risk success is going to be targeted by others. And this is exactly what's happening. If you're interested in Netskope, or if you're already a shareholder of Netskope by chance, you'd want to keep an eye on this and see what the outcome is of these patent infringement claims.
Another key risk that you should be aware of is the complicated shareholder structure for Netskope. We already mentioned that Lightspeed Ventures is a big shareholder, but there's a couple of other items that you should be aware of.
One is there's two different share classes. Class B shares, which grant 20 votes each, and then Class A, those are the shares that you likely have taken a look at, NTSK, that started trading after the IPO. Those get 1 vote each. And if we go back to our shareholder chart from fiscal.ai, Netskope's co-founder and CEO, Sanjay Berry, big insider owner of the company. So that's a good thing. You like your management team to have skin in the game with your business, but the economic interest in Netskope is not the same as the voting or control interest that he has in Netskope. And then when you pair that up with the big ownership of those venture capital companies, this is something we called out a couple of years ago as of particular note and a risk for a company called SentinelOne. There are complications sometimes with these complex shareholder structures because your interests as an ordinary shareholder may not be exactly the same or line up exactly the same as those bigger shareholders, especially the venture capital ones that might be looking for an exit from their investment to move their cash to the next potential big thing. Venture capitalists are always looking to deploy new cash somewhere else. And IPOs are a great way that they can exit. And another key risk that we'll close this segment out with is the same chart we showed you already, the financials. The growth is definitely there. Netskope growing their revenue at an over 30% rate in their latest quarter, Q2 of their fiscal year. But beyond that, well, it's a bit messy, right?
As you can see, Netskope operates at a GAAP net loss. They had a $170 million loss in the first half of this fiscal year, which is down from the previous low of $207 million in the same period last year. So making some improvements there. And free cash flow is still negative.
Yeah, we'd expect to see this on a free cash flow basis anyway. We'd expect to see this improve very quickly, especially in the Q3 report. And in forward guidance, we expect Netskope's management is going to make consistent free cash flow positive results a top priority now that they are a public business. But you need to be aware of this if you're looking at Netskope. It's basic, but the company operating at a loss by most metrics obviously is something that might keep you away from the stock for now. And in addition to that, there are some extra complications here We'll be looking for an update on the balance sheet when we get the company's first report as a going public concern. There's some convertible debt and some preferred stock as well that doesn't participate in the losses, but does participate in any future profitability. Speaking specifically on that point to the preferred stock, that can also be an extra weight, an extra burden on you as an ordinary shareholder if you were to purchase Netskope stock, NTSK, the Class A shares. Something that we'll be looking for on a Q3 earnings update in the not so distant future.
We can sum up this brief video about Netskope with our key takeaway. Yes, we're interested in this company. We haven't bought any of the stock yet, but why are we continuing to follow it even though we've brought up a number of key risks?
It's a fast-growing industry. Cybersecurity is a secular growth trend. Netskope is a small company, but laser focused on one of the fastest growing portions of that fast growing industry, SASE. If we were to purchase in the future, it would be obviously a very small bet, part of our small cap basket, and maybe call it something like a hedge against things going wrong at the SASE leaders, Palo Alto Networks, Fortinet, even Arista Networks. Talked about that over on Semi Insider recently, how they got themselves into the SASE cybersecurity market as well. So Netskope, if and when we make a purchase, would get added as a small bet on that specific market. And we'd be content to, if we bought, just let it go and see what happens.
Thanks everybody for watching this video. Make sure you check out Semiconductor Insider over on our website, chipstockinvestor.com. We have some really exciting things coming up in the fourth quarter. Get over there.
Do it.
See you all again soon, Chipstock Investor.